Well, hi everyone, and welcome to another exciting episode of Secrets to Real Estate Investing. I have with you for the first time a medical professional, a doctor, and I'm so excited for you to hear his story, his background, and his interests, because I know many of you listeners are professional people. You have a job, you may like your job, but you want to learn about real estate investing and how to get into it. Can you balance that with the job you have? Because I know not everybody wants to quit their job and become a full-time fix and flipper, or roll up their sleeves and swing a hammer and work on a house, which I would never recommend you do anyway. But this gentleman is going to be a great story for you to listen to, how you can incorporate real estate investing into your life as a side interest, a side job, or a side hustle. So with that, welcome to the show, Dr. Kenyon Meadows.
Thanks for having me, Holly. Really appreciate it.
Well, I'm so glad you could take time out of what I know is a busy schedule between your busy family with your adorable kids and your full-time job and your real estate investing adventures. So why don't you start by telling our listeners a little bit about your background and some of your life story and how you got to where you are today.
Okay. Well, as you mentioned, I'm a full-time practicing physician. I'm a radiation oncologist. So during the day, I help people treat folks with cancer, and I love doing it. And have developed the side passion of investing and including real estate after some unfavorable experiences with other traditional investments like the stock market. Had a not great time, as most people did in 2008, and then subsequently rebalanced and thought I was doing some conservative investing in oil and gas, and in 2012 that kind of fell through, and then I kind of said, well, you know what, I know the stock market very long term is a way to build wealth, but let me think about some other things in a real serious way. And that's when I began a process of self-education and talking with people and finding out how folks invested in alternatives, which are really anything other than stocks and bonds. And that kind of led me down the path of real estate, private lending, turnkey rentals, and some other things, and then ultimately my book. So that's kind of it in a nutshell.
Oh yeah, that's a tight little nutshell. Why don't you start by telling us kind of your first venture into real estate investing and what that looked like?
Right. So, always being mindful of the fact that I didn't have a whole lot of time. I was always looking for alternative investments that, number one, could provide what I would consider sort of an equivalent return to the stock market. And when you look, they say maybe like 8 to 12% is kind of a typical long-term return of the stock market. So I wanted something that could mirror that, but wasn't correlated with the stock market, and also was relatively passive. So my very first thing into real estate investing was actually private lending. I found some folks that flipped houses and needed some capital. And, once I learned about the process and how you could, have a first position mortgage on the place and be secured and keep your loan to value ratio conservative and charge 10, 12% or so. I mean, that was a big deal for me. I thought this was great, So after learning about the process, and then more importantly, vetting some reliable people to work with, that was my first foray into any type of real estate investing. And then once I got comfortable from there, actually one of the people I was loaning money to encouraged me to say, hey, ultimately you want to own some income property. I mean, it's got a lot of advantages to it, tax advantage wise and other things. So why don't we think about that? And quite honestly, that scared me a little bit, because before I really found out about having like a good turnkey rental provider, I always had the notion that if I own even one or two rentals, like, the notion of getting a call from a tenant and dealing with things. So I had to really be coaxed into it. But once I took the plunge, it's actually worked out to be another relatively passive investment. So,
yeah. I like how you use the word plunge. because as a landlord, someone's got to be using a plunger sometimes. Never
Right.
me, but
Right.
I own a bunch of rentals too. So
Mm-hmm.
I've had just a month ago one of the calls. Miss Holly, I'm so sorry to disturb you, but there's toilet paper coming up in the front yard from the sewer system. Oh my gosh, it happens.
It does happen.
Yeah. But anyway, so going back a little bit, because I know some of our listeners are brand new or just thinking about getting educated about investing in real estate. And I love how you started out with being a private lender. So just so people can understand a little bit more about what that is and what that looks like. I'm a huge fan of it, promoting it. I have a lot of private lenders that lend me money as a flipper and as a landlord that I put them in mortgages on properties. One thing I think is so amazing for investors such as yourself is you have collateral, you have security in the house, where in the stock market, you don't have that. So, I mean, how did you feel about that? Did that give you a greater comfort? And then also maybe talk about what steps, like, did you have to know how to evaluate the home and what loan to value you were going in at that?
Yeah. So yeah, you mentioned the security of actually having a claim on the property. And so, yeah, collateral was big. And then, learning about, number one, how a really experienced rehabber, sources a property and has good relationships, usually with ongoing subcontractors and people he knows that'll do good work and get it done on time, and then accurately placing that after repair value so that it'll move. So, so there's a decent amount to try to get a handle on as a private lender. So, it took me, definitely a few months to educate myself, and then, ask around, and then meet the right people and do the due diligence on it. But the nice thing about it is, as you know, if you meet a real pro, they're doing nice volume, and once you get comfortable with it, you can kind of keep doing it over and over again. So
yes, that's for sure. And my advice to anybody considering doing private lending, if you're lending to a flipper, I mean, if you're just lending to someone that's going to buy and hold the property, you don't have as much risk as you do with a flipper. With a flipper, make sure it's not their first flip, or maybe even their second or third, because a lot can go wrong with a flip, and you don't want to be the learning experience. I've had friends and acquaintances do that, and they lose money on it. So
yeah,
don't be the guinea pig.
Yeah, and fortunately, my experiences have been really good, i.e., I haven't had to take a property back, which I think is the worst thing, because ultimately then I got to figure out what to do with it. And other than some things going a little longer in time, it hasn't really been that bad. Of course, sometimes you can't sell it for quite as much as you want, and having to discount it so you can just move it on into the next project. But yeah, it's been pretty good. I think it's a testament to the folks I work with.
That's great. Okay, well, I know I assume that's not your main focus anymore. Now you're a big fan of investing in rentals, right?
Well, I still do the private lending, but yeah, the rentals came next, and bought my first one a couple of years ago, and then a few months later, again another one, and with the turnkey rental providers. Their model basically is to really try to have you have a very hassle-free experience, so that you will keep continuing to buy subsequent properties off of them, and they manage it for you. That at least that's a good turnkey provider. I know some turnkey providers, they rehab the home, place a tenant, and then give you off to like a third-party manager. But my particular one has stuck with it, and I think it's gone above and beyond the call sometimes to kind of shield me from the tenants.
That's nice. That's really nice, because you don't want to be getting those calls, especially during the day when you're at your job, to be telling you about toilet paper floating in the front yard. Yeah.
And not only that, in terms of dealing with that with the tenant, that point of contact, but also being fairly technologically savvy with a good owner portal and good electronic documentation, and almost in a way sort of making it seem like it's almost like a paper investment, honestly. I mean, that's how good my provider's been. So with that, I definitely have continued to add to the portfolio and are up to 8 properties now, and we continue to slowly build that for
Well, that
sure.
was going to be my next question: is how many deals have you done, and how? I guess if you could explain like how long it takes you to evaluate one and buy it. I mean, as a flipper that buys at auction, the quickest time we had to make a decision was 5 minutes, but I think you get a little bit more time in doing what you're doing, right?
A little bit. So as far as the sourcing goes on the turnkeys, that's on my provider. Now I happen to know that she provides turnkeys, and she has her own portfolio of buy and holds. So I know she's done the courthouse step thing, but most oftentimes it's been like wholesalers who bring her deals because they know that she will buy them. Distressed stuff, the more distressed, the better. She's got great relationships with contractors and subs and all that, and she can get them to start on a project pretty quickly, again, because she does a nice amount of volume. So, yeah.
Well, I'm loving that it's a she. How great is that? Another woman, because we women in this real estate industry are like maybe 10 to 15%. We're just like the little.
Now, ironically, she doesn't want me to mention the company because she really is not looking for like more clients or whatever. But just to tell you a little detail, it's actually it's a husband-wife team, and the husband is a doctor too. Actually, she used to be a nurse, and once they grew their portfolio sufficiently to replace her nursing income, she's now a full-time investor, broker license, property manager, the whole bit. So kind of interesting.
Awesome. That's great. Well, when we're not recording, you'll have to tell me her name. I want to connect with her. Even if she won't come on and be on the podcast. Because I love meeting the ladies that are doing it, making it happen. It's awesome. So why don't you tell us what your experience is with real estate crowdfunding?
Yeah. So after everything kind of kept evolving, private lending, the turnkey. And then just in the course of just learning more about real estate, in 2012, the very first real estate crowdfunding platforms began to come online. And what real estate crowdfunding is, it's basically the online version of private lending or fractional ownership equity, but doing it through what they call them portals. I mean, they're just websites, but that's the term they use in the industry, these crowdfund portals, whereby, as you know, to do a traditional, offline, if you will, private loan or buy a rental property, I mean, you need, $50, $75, $100,000. It's a big chunk of money or more, right? Mm-hmm. And what the crowdfunding allows you to do is to just basically have a little sliver of either a private loan on a property, a sliver of an apartment complex, and the minimums are $1,000 or $5,000. Still, a nice chunk of money, but compared to the typical entry point, it's way the heck less. And so that began to emerge. And so I was an early adopter with real estate crowdfunding. So I've been on some of the main big sites now for, a few years. And being one of the first initial investors, I mean, I talked to the CEOs and, and got to talk to the sponsors of the projects and really do a lot of due diligence. I actually met a couple of them. And so I've been doing the real estate crowdfunding thing for a while now, and I've done maybe close to 50 projects.
Wow, that's a lot. Are you able and willing to share like what your return has been on those? Have you ever lost anything in them, or how's that gone?
Yeah. So roughly speaking, like I said, I think at the time earlier this year, I calculated I did close to actually more like 40 projects, right? And about half of them have cycled through completely. They were like private loans. Maybe they had a 6-month or a year duration and whatnot, anywhere from 9 to 14% interest rates, and they've gone through and paid back. And I've got several more that are performing as we speak now. And I do have a few projects. I think probably 4 that have either gone beyond the original term that they thought in terms of the length of the loan, but there are a couple that are in foreclosure. And this brings up an important point. When it comes to the crowdfunding thing, they offer first position debt, second position debt, equity, preferred equity, kind of all these different ways you can participate. I strictly stick to the first position debt. So on these couple of projects that are in foreclosure, I'm getting updates from the platform that they're going to take back the property, they're going to sell it, and then we should be able to recoup, most of all of our original investment. So I stick to first position debt when it comes to the crowdfunding. But I would say my average return has been about 11% over the 3.5 years or so I've been on it.
That is outstanding,
Mm-hmm.
because that is a passive investment. I mean, some people are getting 11% and they're the ones taking the calls from the tenants and they're dealing with everything, where you don't get any of that. That's awesome. I think I'd be pretty happy with that.
Mm-hmm.
Maybe I should stop the flipping. No, I'm just kidding. I do that, not with the flipping, but hey, flipping is a job.
It's a job, though, right?
It's a whole different route. So I think we can kind of figure out why you went the turnkey route. I don't know if you want to talk about that anymore, but I mean,
well, kind of a common theme amongst anything that I'm doing is basically I wanted something that had a fairly high yield, which for me I consider 10% or above, and I wanted it passive. And as I began to delve into these various things and have experiences, of course, you talk to people, you talk to your colleagues and things of that nature, and I saw so many of them either didn't know about these kinds of things, maybe had a fear of doing them, something unfamiliar and everything. And that kind of inspired me to write my first book on the topic. It's called Alternative Financial Medicine, and it's kind of a play on alternative medicine. And it's targeted toward the busy, high-income professional who may be looking to do some different things financially, and quite honestly, maybe they don't want to hear from a financial pro that's trying to sell them a product. Maybe they just want to hear from kind of one of their colleagues or peers that's just had experience doing the stuff, and just wants to tell them about their experience.
Well, that's really fascinating, and there's such a variety of people who invest in real estate, from someone like you who has a job, and you like your job still, right? You're going to stay at your job. You're not looking to quit. Whereas this other lady who provides you the turnkey rentals, she was looking for a way to not do her job anymore. She probably liked it. Maybe she didn't, but she was ready for a change. And a lot of us go through a lot of different jobs or careers in our lifetimes now. Not everybody does the same thing for 50 years anymore like they used to. So, yeah, I mean, it's just, there's something for everyone in the real estate investing world. And
absolutely.
I love that your niche that you found. So why don't you tell us what specific criteria that you look for in buying a property? Oh, wait, and before that, we didn't even tell our listeners where you live. I mean, not your exact address, but the city and state where you live, and then where you invest, because that's going to be interesting too.
So I live in St. Simons Island, Georgia, which is kind of in the extreme southeast corner of the state on the coast there. You got anybody familiar with Interstate 95 there? I tell folks we're pretty much exactly in between Savannah, Georgia, and Jacksonville, Florida. They're both about an hour to the north and south. And I invest in Jacksonville, Florida, actually. Okay. So, yeah, as far as the turnkeys go.
Great. So then tell us, what are your criteria, or what do you look for when you're buying a turnkey property?
Well, number one, in terms of a rent to price ratio, I do look for what they call the 1% rule, where I try to get at least 1% of the purchase price as monthly rent. I certainly have seen the Jacksonville market appreciate, and it's getting tougher to do that, but that is a criteria. I look for houses in what we call working class, B-level neighborhoods. We don't certainly don't go out on the beach in Jacksonville. That's too expensive, and we don't go too far down market either, because the tenants can be a little higher maintenance, and the property higher maintenance too. So those are my main criteria, and as you probably can appreciate, you know, your providers, they tend to cluster in sort of the similar types of neighborhoods. And so there's kind of two main neighborhoods on the west side of Jacksonville that we kind of farm, and I kind of know what we're getting into now at this point. And that's one of the advantages of sort of sticking to one area geographically. Although I've talked to some turnkey investors who they have you know, a couple properties kind of here and there in various different cities, and I haven't branched off to that yet.
Well, that's interesting. What's the price point that you look for, that you shop in, that you look for?
Well, most of my properties have been clustered in the $80,000 to $100,000 range, and I know some people will say, like, "Wow, that sounds really, really inexpensive." Now, you're out in California, so of course, but you know, Jacksonville, you know, for being a coastal city in a nice climate, it's not. It's in terms of the prices and everything there, it's a very reasonably priced market. We're starting to attract more outside folks who are coming into it because of that, and the city is growing and everything. But you can get a nice, you know, 3-2, 1,200 square foot house in a decent neighborhood in that price range, and have stable tenants, you know, working class tenants. They both have jobs and kids and that kind of thing. That's the profile of most of my tenants. So yeah, you can be done.
That's awesome. And do you get involved with any of the management or tenant selection or approval of the tenants, or do you just hand it all over to the management company and they do it?
Well, we discussed up front what their criteria was, and I have carte blanche to alter things. However, as I said, you know, she's been doing this since '07 and has 40 units herself that are her own properties. So I trust her judgment in terms of the tenant screening. But a couple of, you know, hard line rules that she does have, you know, no prior evictions, and the three times the monthly rent as income.
Yes.
Yeah. So we don't deviate from those two things. We do allow pets in certain properties. That was kind of a discretionary thing if I wanted, you know, that kind of thing. And we had one tenant that had sort of some extraneous circumstances with a quote unquote eviction that sort of really wasn't, and you know, we bent the rules a little bit on that. So, but for the most part, we're pretty strict.
That's great. What is the I don't know, how many years have you been doing this? Total?
Well, I bought the first rental in 2014. I started with the private lending in 2013.
Okay, so you've been a landlord since 2014. How's the turnover for you? And is that something that's stressful with vacancies, or are you able to turn them pretty fast if people decide to leave?
Yeah, well, number one, I've only had actually 2 vacancies over that time, and actually the person in the very first unit, they haven't moved, and like, so people typically stay a couple of years minimum is what she told me, and it certainly is playing out in my properties. So we've only had a couple of vacancies, and she's been able to turn them over fairly quickly. And because of the rental demand and everything, we had one filled in a little less than a month, and I think the other one might have been a little more than a month kind of deal. So not bad at all.
That sounds good. And I know when people are just learning about this, if they're looking at maybe too rosy of a picture, they might not be considering that they may have to come out of pocket a couple of months making a payment if it's financed, and you've got taxes and insurance.
Absolutely.
And sometimes with insurance, well, often with insurance, you pay for a full year up front, well, at least around here, and I mean, you just have some costs, and so you got to be prepared for that, huh?
Absolutely. You know, we've had the plumbing issue happen. We've had a little section of little water damage to the roof or a ceiling and whatnot happen. So yeah, you got to have some reserves. You know, you definitely have to. But again, I do think that for folks, say for instance, that have, you say for instance, high income jobs or businesses or something like that, where they can own the rental properties and have that money in reserve. I think long term though, I mean, it's really a good solid way to build some wealth.
Oh, absolutely. I'm a big fan of it. That's why I have rentals in addition to flipping. I think it's a great thing. Why don't you share with us, like maybe some of your biggest surprises or challenges that you have faced with your investment properties?
Challenges. Boy, I wouldn't say any one in particular, sort of stands out. I mean, nobody likes to get the surprise call that there's a repair that's, we have this thing, if it's less than a couple $100, they'll actually just go ahead and just do it discretionarily. But to get that repair that's going to be more than that, you don't like it. I've been fortunate enough though that I don't touch the money that comes in from the rentals. I kind of let it accumulate for reserves, so you have it. But it kind of sucks to pay $600-700 for repair. You know what I mean? So that's been one thing. I guess a good surprise, not necessarily straightly with the rentals, but once I began to talk to some friends and family about this kind of thing, and once they saw I was serious with it and it was working out, you may have experienced this too. I mean, folks asking you to, maybe mentor them or can they, loan you money or just sort of be a part of it kind of deal. And I've actually been able to incorporate a few friends and family in terms of some private money to help me, do some of this stuff. So that was a nice revelation. So that's been a good surprise, I guess.
Yeah, absolutely. Yeah. I experienced the same thing when people
Mm-hmm.
saw me having success. They, one of my girlfriends came up to me and said, "So do you take investors?" And I said,
Mm-hmm.
"Yes, I do. I better figure this out. But yes, I do take investors," because in the beginning it was just us and our money and rolling our own money. We didn't involve anyone else. And what a great opportunity to give the same, upside to other people. So, okay, well, we got to wrap things up here. So let us talk about your great giveaway, your book that you're giving away today. So listeners, you're going to go to hardhatholly.com/70, 70. So hardhatholly.com/70 to get Dr. Kenyon Meadows' great ebook that he's giving away called Hassle-Free Rentals Using the Turnkey Approach. And Dr. Meadows, tell us a little bit about this and why you wanted to write it and what's it all about.
Yeah, so the giveaway chapter is the giveaway ebook is actually a full chapter from the entire alternative financial medicine book, which is available on Amazon and on my website as well, alternativefinancialmedicine.com. So it's one of 8 chapters, each covering a different alternative investment, not all of which are real estate, by the way. Besides some of the various real estate categories, there's also things in there like peer-to-peer lending, where you loan money to people online for discretionary things, credit card bills, vacations, that kind of stuff, and earn interest that way. There's actually a chapter on how the crowdfunding space, you can use that to loan money to establish small businesses actually too. That's just an example of some of the other things that I have delved into. And when it comes down to it, I guess I really like lending money at attractive interest rates and trying to figure out ways to do that. So if that's down your alley, that there's something in the book there for you for sure. And specifically the chapter on the turnkey rentals, it goes into detail about the investment criteria. There's a checklist in there in terms of things that you want to either have freshly rehabbed or you want them to be of a certain age or less in the house, things like the plumbing, electrical, things of that nature. I go over the numbers of my first turnkey rental, how it performed over the first year with all the, the taxes, insurance, and everything like that. And I also provide some resources, some podcasts I've listened to that help me out. So, it's got a lot of stuff packed in there.
Well, fantastic. It just sounds like a wealth of information, and I've seen it, readers and listeners, it is. So definitely go grab that. And you can also get that by texting to my text number, which is 38470, and just type in the word hard hat, as in all one word, hard hat, and spaces in it. And you guys can download it there too. So Dr. Meadows, why don't you give out your preferred contact method for people to get in touch with you if they'd like to reach out to you?
Yeah, I mean, if they go to alternativefinancialmedicine.com, you have an email field there. I actually have a little widget installed where you can leave a voicemail message right there on the website. Join my email list, link to the book. It's all right there, alternativefinancialmedicine.com.
Love it. Love that name.
Mm-hmm.
Yay. Great. Well, I just want to thank you so much for your very valuable time today and just providing that example to people that want to get into this, but they don't want it to be a full-time job, just as proof that it can be done while you have a family and a full-time job. You can do it. It doesn't have to be full-time. So what an inspiration you are, and I'm so happy for all your success and wish you continued success.
Appreciate it very much.
Well, thank you again. And listeners, what a great example you had today. No excuses. Get out there and take some action.
Excellent.
Hey there, thanks for watching the video. Make sure you like it and click subscribe to get notified of more videos. And you can go to hardhatholly.com for a free download on secrets to finding great deals.